This is the MTPredictor weekly market update for March 8th. All right, let's start with the Dow here on the daily chart. This is actually the futures contract, but I'm going to kind of eliminate the right-hand side of the chart here and go back to the buy setup here, because this, in fact, we already knew the next larger degree resistance. If I right-click and I take a decision point, this gives us the next resistance level here. Which also happened to be the target for this particular trade setup here. But when we reach this level, I said in the weekly market update at the time, this is the area we anticipate now that this market is due for a correction. Just as we had a DP sell here, market corrected, go back here, market corrected. And so, we began that correction here. You see the red seller's candle that formed, that was on the 3rd of March. Once that got broken, we've gotten some follow through there. So, where's the next support? We're going to have some support in this kind of Fibonacci cluster here, and then below that we'll take a decision point off of this level, and here's your next decision point support. Until if we get a rally at some point and we get a new swing in, we'll have a closer level of support. But right now, this is we'll look around 17,600 in that area, beginning some support there. All right, let's go over to the NQ, because remember I was talking about this trade. The Dow and the S&P had hit their resistance, but the NQ hadn't yet. Now the NQ has reached its target. And then I said, now we've got all three markets in resistance, and we should expect that we may see selling coming in off of the, now that we've got all those markets in resistance together at the same time. And in fact, of course, that is what we've gotten here. Again, just like the Dow and the S&P, the rally here, there were no pullbacks, in this rally. Which also means, when it goes up like that, it can also come down pretty quickly as well. Not a lot of trades in terms of, you see all this action in here where we had a lot of back and forth, a lot of volume going in this area here. We don't have that here. So sometimes the drops can be, fast, kind of like we saw on Friday. So we'll see. We'll keep an eye when the next supports come in. Again, you'll have a little, this has a little better pattern here, so this would be a little wave 4 pullback if we get down into this level below 43.50 in the NQ. All right, if they break this level, just take this off here. If they break this level, then the chances are they're going to erase the whole pattern. We can take our DP back off of this level here. It'd be the next. If this gives way, we'll have some support down in here. And then just check the S&P here. Now, I get a number of questions because the weekly market update, I tend to look at the bigger time frames, weekly, daily, weekly, and monthly. But you can use MTPredictor. In fact, we use it during the day in our trading room, in the smaller time frames. And you can use, these are the add-ons for NinjaTrader 7, but we have our own standalone platform as well, our own charting package. But in Ninja, you can use range bars and tick charts and Renko and all the different chart types that you like. But anyway, this was a 3-minute chart of the S&P on Friday, and we caught the direction very nicely because we had, just kind of cover this just so you can get an idea how we can use MTPredictor intraday as well as in the bigger time frames. But here we had an outside gap down. The indicator for the software gave us this indication that we had an outside gap down, meaning we opened here in the S&P below the previous day's range. Here was the previous day's low. And this first 3-minute candle from high to low was completely below the previous day's range. So that gives us the first indication there may be a lot of selling pressure in the market. And typically what happens is you'll get a rally into 10 o'clock. And as long as they have not filled the gap back to the previous day's close, which would have been 2099.50 on Friday, Thursday was the prior day, so this close was on Thursday. But on Friday, as long as they didn't fill the gap back to Thursday's close, by 10 o'clock, the tendency is that market will roll over and go on to new lows. So typically, this pullback, it's either going to be a wave 2 or a wave 4. So we can project wave 4 here, and this is where we anticipated that rally to unfold into around 10 o'clock. And so here, this first little red candle here was the 10 o'clock candle. And so we just set up a short trade in this area here, looking for this market to go to new lows in wave 4, heading to wave 5 to the downside. Here was the average true range, this black dotted line. That was the average range that the S&P ran over the last 14 days. You can see it definitely took that out on Friday and trended lower, basically the whole day. Alright, so that's how we play what we call an outside gap down. If they can't fill that gap in that first half hour trading, it tells us there's a lot of selling pressure. We anticipate market's going to go to new lows, and we just want to hop on board, find a spot on that pullback to ride that down. So nice little intraday trade setup there. But let's just go to the daily chart now. And again, if I eliminate the right hand side of the chart here, here was the last major swing high. We'll take a decision point off of that, and this told us if the S&P comes into this level, this is an area we should look for a potential corrective action, just as we did here, just as we did here, just as we did here, and so on. Right, so we pay attention when we get into these levels here. And again, we'll have some support. There's a cluster of fibs in this area, may act as support, and then take a DP off of this swing, and just right around 1960 there would be the next daily support. If we put a new swing low in, if we get a rally here and we put in a new swing low, we'll be able to take a decision point off of that level, and we'll have a new support, which will probably come in somewhere around this wave 2 or B support level that we have currently there. Alright, let's look at some other markets here while we've got time. Well, this happened to be, this is gold again on Friday. This was our 8 range chart. One of our clients likes this little 8 range chart here, and you can see these are the automatic trade setups that the software generates in real time, buy and sell signals. This STF indicator here, when it's red, it's indicating the larger degree trend is down, so our newer traders know to only take the sell signals here. And you can see the whole premise behind these trade setups is that they're all low risk, so in this case a risk of $400 in exchange for an $1,800 reward, or 4.7 times that. So nice little trade there. Again, you ignore the buy signals when this oscillator is red here. Another sell signal here. This one was good for 4 times the initial risk. Okay, a losing trade here. Oops. If you reshorted here, let me clear that off. This would be what we call a 1R loss. This one here, or a $400 loss. We're okay taking that $400 loss if we can come back and again take a larger win. In this case 5.5 times the size of the prior loss there. Again, we'll ignore the buy signals. We'd only be looking to take the sell signals. Right. So again, there's so many utilizations of MTPredictor, both the smaller time frames and the larger time frames, so I just wanted to kind of show some of that. But let's look at actually, let's look at oil. I'll show you oil on the smaller time frame here on this little 8 range chart on the CL. And same thing, you're gonna when this is red, we're going to ignore the buy signals. We're only taking the sell signal. You can see there were plenty of opportunities. There's a loser here. That was early in the morning. Another loss here, losses here. So 3 losers in a row, right? But then you take this one and you make back those 3 losses in one trade, and you're back on the plus side because this trade was 4.2 times greater than each one of those 1-hour losses. Again, losing trade here, but you come back and take 3 times your initial risk, ignoring the buy signal here, just taking the sell signals. Again, another 2.8 times the initial risk, and there's another sell here, another 2.5 times your initial risk. Right, this one was later in the day. This one failed, but you can see you're taking 2.5 times your initial risk, but when you lose, you're only losing 1 risk unit. So again, this works the same in the smaller time frames as it does in the, whatever types of charts that you like. You can utilize these, but let's look at some of the bigger picture stuff. We'll go back to the bigger picture stuff here. So again, here's oil on the daily chart, and we got the low here off of the DP buy signal. We reached that target. Again, that is a minor resistance level, and oil just kind of trading, hit that level, has not been able to get through that level. There's another little buy signal here. Now this, again, the STF is red, indicating the larger degree trend is down, so our new traders would avoid this. But I think, well, actually, we're not quite to the, go to the monthly chart here. We haven't hit that monthly support yet. Let's see if I can bring it up on the, get a little more data. I'm pulling it up on the continuous contract here. Okay, so here's the monthly chart of the CL oil. And you can see there was a couple of sell signals here. Those were standard trade setups. You see the target on this first trade setup. But if I take the DP off of this swing, we're going to have some larger degree support that'll come in before that target. I think oil maybe just taking a breather here, maybe get a little rally if we can get through that little wave forward decision point from the daily chart. But I think we're probably going to see come down and test this $40 level, maybe just below that, and then we'll keep this target in mind around 1858. Again, bigger picture here. This is the weekly, or I'm sorry, the monthly chart. All right, I want to check the bonds. Because we've been monitoring the bonds here. Now this is the monthly chart. I'm just going to check the wave pattern. You can see on the monthly chart the bonds have come into the typical wave 5 target area. We close, well, we'll see how we close the month. If we close this red seller's candle by the end of the month here, and that low, whatever the low ends up being, gets taken out, then we may have some more fall through to the bonds to the downside, which means higher interest rates. I'm going to go to the weekly chart here. Actually, let's go to the daily chart, and we can see let's see, this chart is not correct. Let me use the actual bond contract. It's got a bad tick there. This is better. So there's that 5-wave pattern on the daily chart right into the minimum wave 5 target. Right, the tendency is we get a correction back to the wave 4 DP, and we said watch this area, because if this doesn't hold as support, the tendency is then they're going to wipe the whole 5 waves up. They're going to wipe that out to the downside. So we go back to the start of the wave 1, which was here. We take our decision point off of that level, and you can see we've come into that area. We got some high volume spike came in on Friday, indicating that there may be some professionals stepping in and taking profit here, or in buying in earnest. Your next resistance level now, we can take a decision point off of this. And this TS4 buy signal here, this is a pretty wide candle here. All right. So we're going to see now if this breaks down, and we do have strength on the STF to the downside, indicating there may be more downside ahead. And then we may get, maybe get a little rally off here and some rollover. If they retest this level, if they come down and retest this level, take it out. And we've got, well, we can take a swing back here, some more support here. All right, but the point is, this is, when we look at the dollar is, moving higher. Oil is moving lower. Those are deflationary. But this is a sign, the bond market saying that there's inflation down the road. So we want to pay attention to this. All right, so I'm kind of running out of time here. But if you look at the dollar, if you look at oil, of course, we looked at, those are, it's a tale of two stories here. But the bond market is said to be the smartest market in the world, so we want to pay attention, because this is telling us that there's inflation down the road. And I was reading an interesting story in Europe now. There are bonds that are paying negative interest rates, and that people are buying them. Institutions are buying them, and that's just a sign. It just tells me that there's the market is not functioning properly. So at some point, it could be something in a flash that happens. It could be something that takes years to unfold. I don't know, but there are structural problems in the market, and the market is not acting properly, I guess you could say, and it will get resolved at some point. So keep that in your mind as the days go by here. And data-wise, it's going to be a slow start to the week here. Things really don't get going in terms of economic data until Thursday with the jobless claims and retail sales, and then Friday with the PPI and consumer sentiment. So maybe a slow start to the week, and then things will pick up after the middle of the week. So stay on your toes. We'll be back next week and take a look and see how things are progressing.